Hello and welcome to this November 17th, 2010 video version of Invested Central's Chart of the Day. I'm Tom Boley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we're taking a look at the US dollar index at StockCharts. That's the ticker symbol $USD. When you take a look at this is a 5-year weekly chart. We provided this to members, and actually you can see some of the information that we provided to members a couple of weeks ago. This was in our Market Journal section where we highlight certain sectors or industries and so forth. We highlighted this one a couple of weeks ago. We thought it was important because if you take a look at the dollar index, you can see that the dollar had been or has been on this trend line, holding this trend line for the last 2.5 years, and we've had multiple tests along this trend line. So when we came down and we tested this at the end of October, it was a critical area, and the weakness that we saw in the dollar, especially in September and October, led to some very nice gains in material and energy stocks. It led to nice gains across all of equities, but especially in the materials and energy spaces where they're very sensitive to dollar movements. Now, because we were coming down and hitting this price support level, obviously it was time to book some gains in materials and energy, because unless you get a breakdown below this trend line, you're probably going to start seeing downward pressure on materials and energy stocks as the dollar bounces off support. And that's what we've seen here over the last couple weeks. We've now seen that the dollar index has moved up off of the 76 support level, this trend line support, and we've moved up closer to what we thought would be short-term resistance up near 80. So now we've got the dollar index, which was at 76, actually a little bit below 76 on an intraday basis, now back to 79.25. The 20-week moving average comes in at 79.79, and price resistance is at 80. So we're getting very close now on this bounce back up to key short-term resistance. This is an area now that the material stocks have pulled back. This represents a decent area to think about getting back into some of those materials and energy stocks that you may have taken profits on a couple of weeks ago. Yesterday we provided the SLV, which is an ETF that tracks silver. We kind of felt like silver was getting back very close to its support level and back into gap support, and after trading down earlier on Tuesday, silver did rebound and come back up. So it's going to be very interesting, I think, to see if the dollar can make this push through short-term resistance from $79.79 up to $80. Right now closing at 79.25 on Tuesday. We don't have a whole lot further to have to wait and see whether or not we get a reversal here. The MACD on the dollar on a weekly basis is still very weak, so any kind of a bounce to the upside I would expect to be rather short-lived, and that's why I think the 20-week moving average could put a little crimp in the dollar bulls camp as far as whether or not we can make another push to the upside. So watch this range pretty closely. 76 downside, 80 topside. Again, as we get closer to 80, it might bode for some additional weakness in the dollar coming up, maybe to go back down and test the 76, 77 area. And that pullback in the dollar could coincide with one more bounce in basic materials and energy. So keep that in mind. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at InvestedCentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.